I've been approving trillions of dollars in credit for 40 years, and I'm going to reveal a truth no one tells you. The credit score system is a game, and banks know the rules, you don't. Inside major banks like JP Morgan, we sit on credit committees every day. We might reject someone with a 720 score and approve someone with a 680 score. Why? Because the score alone means nothing. But banks won't tell you that. Today, I'm going to tell you everything I've learned in my 40-year career. How to raise your credit score 200 points. The secret to borrowing at lower interest rates and the insider tricks banks never reveal. By the end of this video, you'll know the rules of the game too. Let me tell you the truth first. The credit score industry is a $4 billion annual business. Equifax, Experian, TransUnion, these three companies control your financial life. And trust me, that control is very powerful. If your credit score is above 750, the world is yours. You can buy a house, get a car loan, high credit card limits, low interest rates. But if your score is below 650, everything closes. Banks reject you. You can't find a rental. Some employers won't hire you. And here's the real tragedy. Most people don't even know why they have a low score. I pay my bills every month, but my score keeps dropping. I paid off my credit card debt, but nothing changed. I haven't had credit for years. Why is that hurting my score? I hear these questions every day. And the answer is simple. You were taught the wrong things. Banks tell you how credit scores are calculated. 35% payment history, 30% utilization ratio, 15% credit history length, all this. But what they don't tell you, the psychology behind these rules, how to play the game, and how to hack the system. Today, I'm giving you that knowledge. First, understand credit score. It's just an algorithm. Credit score isn't mysterious. It's not human judgment. It's just an algorithm. The FICO score, the most widely used system, is based on 5 factors. 1, payment history. 2, credit utilization ratio, 30%. 3, length of credit history, 15%. 4, new credit inquiries, 10%. 5, credit mix, 10%. Everyone knows this, but most people apply it wrong. Let me give an example. Last month, 2 people applied, both wanted a mortgage. Person A, 720 score, 15-year credit history, never missed a payment, looks perfect. But when I looked at the file, what did I see? All 5 credit cards maxed out, utilization ratio 95%. We rejected the application. Person B, 680 score, 8-year credit history, 2 small late payments. But when I looked at the file, I saw credit cards at 10% of limit, 2 different credit types, credit card plus auto loan, no late payments in the last 2 years. We approved and gave them 3.5% interest. See, score is just the starting point. The real story is behind the score. And here's the truth. Bankers know but won't tell you. If you understand the algorithm, you can optimize it. Strategy 1, a credit utilization game. The fastest score booster. The fastest way to raise your credit score. Lower your utilization ratio. What is utilization ratio? Your credit card debt as a percentage of your total limit. You have a $10,000 limit, you owe $7,000. Your utilization is 70%. And here's the secret. You need to be under 30%, preferably under 10%. Why? Because the algorithm thinks this person is using most of their credit limit, so they need money, so they're risky. But if you're at 10%, the algorithm thinks this person has access to credit but barely uses it, so they don't need it, so they're trustworthy. Now, here's the trick. Banks won't tell you, pay before the statement date. Most people pay their credit card when the bill comes. Big mistake. Your credit card company reports your balance to credit bureaus once a month on your statement date. So if you wait until the due date to pay, the high balance has already been reported. What you should do, pay before the statement date. Example, your statement date is the 15th of every month. Your due date is the 10th of the next month. You charge $5,000 during the month. If you pay on the 10th, the $5,000 gets reported on the 15th. But if you pay on the 14th before statement, only a small balance gets reported. I've seen people raise their scores 40 to 50 points in 1 month just by doing this. Trick #2, request credit limit increases. Here's something counterintuitive. Asking for higher credit limits can improve your score. Why? Because it lowers your utilization ratio. Example, you have $10,000 limit, $3,000 balance equals 30% utilization. You request an increase to $20,000. Now you have $20,000 limit, $3,000 balance equals 15% utilization. Your score goes up, but here's the key. Don't spend more. Just increase the limit. Large banks see this pattern repeatedly. Clients who strategically manage their limits have 30 to 40 points higher scores than those who don't. Trick hash 3, the multiple payment strategy. Another insider trick, make multiple payments per month. Why? Because every time you make a payment, you lower your reported balance. Example, instead of charging $3,000 and paying once, charge $1,000 three times and pay it off after each charge. This keeps your reported balance consistently low. Professional credit optimizers do this religiously, and their scores reflect it. Trick hash 4, strategic card use. Don't close old credit cards, even if you're not using them. Why? Two reasons. One, closing them reduces your total available credit, raising your utilization ratio. Two, closing them shortens your average credit history length. Instead, keep them open, use them for one small purchase per month, like a coffee, pay it off immediately. This keeps them active without increasing your utilization. I've seen people drop 30 to 40 points just by closing an old card they thought they didn't need. Let me tell you a real story. In 2019, a client came to me. His score was 640. He wanted a mortgage but couldn't get approved. I looked at his file. He had $8,000 debt across 3 cards with $10,000 total limit, 80% utilization. That's what was killing him. I told him, don't pay off the debt yet. First, request limit increases on all 3 cards. He did. His limits went from $10,000 to $18,000. Suddenly, his utilization dropped from 80% to 44%. His score jumped to 670 inches, 30 days. Then I said, now start paying down aggressively, but pay before statement dates. He did. Within 3 months, his score was 720. We approved his mortgage. That's the power of understanding utilization strategy. Strategy 2, payment history manipulation, fixing the past. Payment history is 35% of your score. The single biggest factor, and here's the problem, one late payment can drop your score 60 to 100 points. But here's what banks don't tell you. Not all late payments are equal, and some can be removed. The severity hierarchy, the algorithm treats late payments differently based on how late 30 days versus 60 days versus 90 days, how recent, last month versus 3 years ago, how frequent, one-time mistake versus pattern. A 30-day late payment from 3 years ago, minimal impact. A 90-day late payment from last month, devastating impact. Understanding this helps you prioritize trick hash zone, a goodwill letter. If you have 1 or 2 late payments and you've been a good customer otherwise, you can ask the creditor to remove them. It's called a goodwill adjustment. Here's how it works. Write a letter or call explaining, 1, you've been a loyal customer for X years. 2, the late payment was a one-time mistake due to legitimate reason. 3, your payment history has been perfect since then. 4, you're requesting they remove the late payment as a courtesy. Will it always work? No, but it works about 30, 40% of the time, especially with smaller creditors. I've seen scores jump 50 to 80 points from one successful goodwill letter. Pay for delete. If you have accounts in collections, here's a strategy. Before paying, negotiate with the collection agency. Offer to pay in full if they agree to delete the account from your credit report. Get it in writing. Then pay. This is called pay for delete, and it's not always allowed, but many collection agencies will do it because they want the money. I've seen people raise their scores 100 plus points by clearing collections this way. Trick hash 3, dispute inaccuracies aggressively. By law, credit bureaus must verify any information you dispute. And if they can't verify it within 30 days, they must remove it. Go through your credit report line by line. Look for accounts you don't recognize, incorrect late payment dates, balances that are wrong, accounts that should have been removed. Dispute everything that's inaccurate or unverifiable. The credit bureaus have 30 days to investigate. Many times, especially with old debts, the original creditor can't or won't provide documentation. Result, The item gets removed, your score goes up. I know someone who disputed 12 items on their report. 7 were removed because they couldn't be verified. Their score jumped 130 points. Become an authorized user. Here's a powerful strategy if you're rebuilding credit. Ask a family member or friend with excellent credit to add you as an authorized user on their card. You don't even need to use the card. Just being added as an authorized user can add their positive payment history to your report. This is especially powerful if they have a long credit history, 10 plus years, low utilization, perfect payment history. I've seen people with no credit history jump to 700 plus scores within 60 days using this strategy. But be careful. If that person misses payments or maxes out the card, it hurts you too. Strategy 3, credit history length. Playing the long game, 15% of your score, is based on the length of your credit history. The longer, the better. But here's the nuance. It's not just how long you've had credit. It's the average age of your accounts, the average age trap. Let's say you have 3 credit cards. Card A, 10 years old, 5 years old, 2 years old, average age, 5.6 years. Pretty good. Now you open a new card, suddenly card A, 10 years. Card B, 5 years. 2 years, card D, 0 years. Average age, 4.25 years. Your score drops. This is why opening too many new accounts hurts you. Keep your oldest accounts active. Your oldest account is gold. Never close it. Even if it has a $500 limit and you never use it, keep it open. Use it once every 3 to 4 months for a small purchase. Pay it off immediately. This keeps it active and preserves your credit history length. Brick hash 2. Be strategic about new accounts. Don't open new credit accounts unless you really need them. Every new account lowers your average account age, creates a hard inquiry, which temporarily drops your score. Signals to lenders that you might be taking on too much debt. I recommend only open new credit when it serves a specific purpose, better rewards, lower interest rate, etc., and do it sparingly. Maybe 1 new account per year maximum. Trick hash 3, the backdating strategy. Some creditors, when you're added as an authorized user, will backdate the account to when it was originally opened. Example, your parent opened a credit card in 2005. They add you as authorized user in 2025. Some creditors will report the account to your credit file with a 2005 start date. Suddenly, you have a 20-year-old account on your report. Your average age skyrockets. Not all creditors do this, but American Express and some others do. Strategy 4, new credit and inquiries. The timing game. Every time you apply for credit, the lender does a hard inquiry on your credit report. Each hard inquiry can drop your score 5 to 10 points. But here's what banks don't tell you. The impact diminishes over time, and multiple inquiries for the same purpose are often counted as one. The 14 to 45 day rule. If you're shopping for a mortgage or auto loan, the credit bureaus understand you'll shop around. So they give you a window, usually 14 to 45 days, depending on the scoring model, where multiple inquiries for the same type of credit count as just one inquiry. This means you can shop rates aggressively without tanking your score. But this only works if you do it within the window and for the same type of credit. Rate shopping strategy. When you're ready to apply for a mortgage or car loan, do all your applications within a 2-week period. This way, all the hard inquiries cluster together and count as one. Don't space them out over months. That creates multiple inquiry hits and avoid unnecessary inquiries. Every time a store clerk says, want to save 15% today by opening our store credit card, say no. These inquiries add up. And store cards often have low limits and high utilization, which can hurt more than help. Only apply for credit when you genuinely need it and have a strategy for using it. Trick hash 3, soft inquiries don't count. There's a difference between hard inquiries when you apply for credit and soft inquiries when you check your own score when companies pre-approve you. Soft inquiries don't affect your score. So check your score as often as you want, monitor it, use free services like Credit Karma. These won't hurt you. Strategy 5, credit mix, the diversity advantage. 10% of your score is based on credit mix, having different types of credit. The algorithm likes to see revolving credit, credit cards, installment loans, auto loans, mortgages, personal loans, different creditors. Why? Because it shows you can manage different types of financial obligations. Someone with only one credit card is seen as less proven than someone with a credit card, car loan, and mortgage. The strategic installment loan. If you only have credit cards, consider adding an installment loan, but don't take on debt you don't need. Instead, use a credit builder loan. Some credit unions offer these. You borrow a small amount, $500, and they hold it in a savings account. You make payments for 12 months, then they give you the money back. The only cost is the small interest, but you get an installment loan on your credit report. I've seen scores increase 20 to 30 points just from adding credit, mixed diversity. Don't close your only installment loan. If you have a car loan or personal loan that's almost paid off, you might think, great, I'll pay it off early and save on interest. But if it's your only installment loan, paying it off might actually lower your score temporarily because you lose credit mix. Better strategy, make regular payments until it's naturally paid off, unless the interest savings are substantial. Now, let me give you a complete 90-day plan to raise your score 200 points. Month one foundation, week one, pull your credit reports from all three bureaus, annualcreditreport.com, identify all errors, late payments, collections, document your current utilization ratio on every card. Week two, dispute any errors or inaccuracies, request credit limit increases on all cards. Set up auto pay for minimum payments on everything, prevents future late payments. Week three, write goodwill letters for any legitimate late payments. If you have collections, negotiate pay for delete agreements. Calculate your target utilization under 10% on each card. Week four, start paying credit cards before statement dates. Pay down highest utilization cards first. Check if anyone can add you as authorized user. Month two, optimization. Week 5 to 6, continue paying before statement dates. Monitor dispute responses. Follow up if needed. If approved for limit increases, don't increase spending. Week 7 to 8, pay down balances aggressively. Keep old cards active with small monthly charges. Avoid new credit applications. Month 3, maintenance. Week 9 to 10, maintain low utilization under 10%. Make multiple payments per month. Check credit score progress. Week 11 to 12, final push on paying down any remaining balances. Ensure all payments are on time. Pull updated credit reports to see improvements. Expected results. If you follow this plan, here's what typically happens. Month 1, 20 to 40 point increase from fixing errors and lowering utilization. Month 2, additional 30 to 50 points from continued optimization and dispute removals. Month 3, additional 40 to 60 points from established pattern of good behavior. Total 90 to 150 points in 90 days. Some people achieve even more. And here's the beautiful part. Once you're above 740, you qualify for the best interest rates on everything. Let me end with some truths. Banks will never openly share. Truth has shown scores are negotiable in practice. Banks have lending guidelines, but they also have discretion. If your score is 680, but everything else looks good, stable income, low debt to income ratio, cash reserves, a good loan officer can get you approved. Never assume you're automatically rejected. Apply. Explain your situation. Negotiate. Truth has 2. Credit score inflation is real. In the past 10 years, average credit scores have risen significantly. Not because people are better with money, but because the algorithms changed and banks want to lend more. Don't stress if your score is imperfect. A 680 today is not the same as a 680 inches. 2005, Truth Hash 3. Banks profit from your low score. The lower your score, the higher the interest rate they can charge you. Someone with a 640 score pays 2 to 3% more interest than someone with a 760 score on a $300,000 mortgage. That's $200,000 plus extra in interest over 30 years. Banks don't want you to optimize your score. They profit when you don't. Truth Hash 4, credit repair companies can't do anything. You can't do those companies that promise to fix your credit for $100 a month. They're just disputing items and writing letters, things you can do yourself for free. Save your money. Follow the strategies I just gave you. Truth Hash 5, your score will fluctuate. That's normal. Don't panic if your score drops 10 to 20 points one month. Scores fluctuate based on reporting timing. Focus on the long-term trend, not month-to-month volatility. Here's the bottom line. Credit scores seem mysterious, but they're just math. And once you understand the math, you can optimize it. I've given you strategies that work, strategies I've seen work thousands of times over 40 years in banking. The 5 strategies: 1, master utilization, get under 10%, pay before statement dates. 2, fix payment history, use goodwill letters, pay for, delete, disputes. 3, protect credit history length, keep old accounts open, be strategic about new ones. 4, time your inquiries, cluster them within 14 days when rate shopping. 5, diversify credit mix, add installment loans strategically, follow the 90-day plan, be consistent, be patient, and remember, banks profit when you have bad credit, so they're not incentivized to teach you this. But now, the game has rules. You just learned them. Now go play and win. I've shown you the insider playbook. If this was valuable, like this video, share it with someone who needs it, and subscribe, because there's much more to learn. Take control of your credit. Take control of your financial life. See you in the next one.